is talk about our income solutions, and specifically two really top of market income solutions that we have out there, and kind of where they're applicable with people you're meeting, and why I'm talking about them today. So again, my name's Ryan Markham. I've been with F&G for just over 4 years now. I've been in and around the annuity business since 2006 with a minor detour. I did some professional drumming, which is a whole other story. Happy to talk with people on that sometime. But I love this business, and I've been on kind of all sides of the house. I've been internal here. Obviously at the corporate level, I've been an advisor. I had a financial advisor practice with a partner that I averaged about $6 to $7 million of fixed indexed annuity business a year, and then did manage money on top of that. So I really have an appreciation for what you guys do. I really firmly believe that this is a great business to be in. We change people's lives every day. We allow people to retire with dignity. So again, thank you for letting me stop in today. So let's get started with a little overview on F&G. We're in a really good spot right now. Financially strong. We had a record year last year on the annuity side. We did close to $12 billion in annuity business, which we're very proud of. We were up 20% last year, and we're looking to grow on that this year. And we obviously don't get there on our own. We get there through our partnership, with people like Experior, who are out there telling our story to your clients. Realized all right. We have a lot of, I would say, strategic partnerships that we work with, and a lot of carriers do. I think one that we bring up, and I like to bring up every time I have a discussion about F&G, is our partnership with Blackstone. And the reason I like to talk about it is Blackstone is the world's largest private asset manager. And we partnered with them a few years back to manage our general account. We used to handle our general account internally, and then we decided, let's partner with Blackstone. So Blackstone does not own us. We're not owned by them, but we do strategically partner with them. And what that does for us is it makes for better pricing for us, so our products can be a little more competitive. Our commissions can be solid. Our renewal rates can be good. No one likes to write an annuity and then, the next year or 2 years down the road at those anniversary meetings, all of a sudden, that 6% cap is now 3% and then 2%, right? We don't like that. So Blackstone's been a huge partner with us. We went from having 6 asset classes that we could pick from when we managed our own general account to 14 with Blackstone. So, I look at it with our chief investment officer, Lena Punjabi. We pick the neighborhood of where we want our investments to be. Blackstone helps us pick the houses in that neighborhood. And we call it our Blackstone Advantage. And it's something, that kind of gets overlooked sometimes, but I do like to put it out there, because pricing your products appropriately, especially in the crazy market we're in, is extremely important. Keeping those rates consistent is important for your clients to be able to, continue to grow their portfolio. We have a lot of annuities. I get told that a lot, and we do. And a lot of the names kind of sound familiar on some of them, so it can kind of get confusing sometimes. But we really can be a one-stop shop for annuity business for whatever you're looking for, whether that's just pure accumulation, low fee growth, a great bond alternative, CD alternative, while protecting principal. Today, I'm going to focus on, like I said, a couple of our income solutions. And I think income, I'm starting to hear and I'm starting to see people are starting to really get back into, worrying a little bit, especially with what the market's doing and tariffs out there. People are worried about running out of money before they run out of breath. And we need to be able to show them solutions that can help offset that risk and make sure that they can retire with dignity. So I'll talk about a couple of great solutions there. But we also have legacy-focused products as well. Obviously, life insurance is the best mechanism for that, but there are clients sometimes that maybe can't qualify for underwriting or don't underwrite well. And we do have options to leverage some, cash to be able to pass on in a pretty efficient way on our annuity side. So right now we're in the peak 65 zone. Between now and 2027, there are 4.1 million people reaching retirement age annually, 11,200 daily reaching retirement. And we co-sponsor every year at F&G a survey that puts out what is your main concerns, people in or near retirement, what keeps you up at night. 46% of those people that we surveyed said protection from loss. You know, they lived through 2008. They lived through the 80s and the market, you know, the market along gas lines and high inflation. And they remember, you know, sometimes their parents, Great Depression going through this. And now they're getting to that age, they're worried about protection from market loss. And we're seeing some obviously big volatility now. They are also concerned about opportunity for growth. They realize that while they want to protect their money, they can't just stick it in their savings accounts and get, you know, a 0.5% interest, right? The cost of living is going up. We all know egg prices, gas prices, you know, hopefully those will level off. But as it is now, things are not getting cheaper. We got to keep up with the cost of things. And then last but not least, and this wasn't last, but this was the third top of mind concern. 35% of people we surveyed were worried about guaranteed income, that income amount never running out in retirement for them. But that's why I wanted to focus on our income products, because I think it's a great time to have discussions with clients that you're sitting down with about what their income plan is. Because what I found when I worked with the clients is most of the time when you ask a client what their guaranteed income plan is in retirement that's going to be there no matter what, even if their money goes away, we're still going to have a steady stream. Not very many people say, yeah, I've got my retirement plan together and my income plan. So it's a good conversation starter on, you know, getting those wheels turning. So I'm going to lead off with our top selling annuity from last year called Safe Income Advantage. We did over $1 billion in just this one product alone. And we're top of market for this guaranteed income story. What do I mean by that? You put your money in, the client puts their money in, and our payout factors are very aggressive. So that means that whatever age a client is, and I'll show you where we're winning with these, but we're top of market in most payout scenarios, and our percentage of the money they put in that we pay back out to them. And it makes us very competitive in that space. The Safe Income Advantage in and of itself is a 10-year fixed indexed annuity. So your client puts their money in, it's a 10-year product. Every year that it sits in there, it will grow at 7.2% interest. You're probably like, why 7.2? Some of you may know. There's a thing called the rule of 72. 7.2% interest in 10 years, your money will double, right? So 100,000, 10 years from now becomes 200,000. When your client decides they're ready to turn income on, and something cool with this annuity is they can take income immediately. They don't have to wait 10 years. They can take it any time between immediately or 20 years down the road. There's flexibility in whatever their income plan is. But once they do choose income, and I'll show you what it looks like, there are 3 income options clients can choose from. There's level income, there's fixed increasing income that gives them a pay raise every year, and then we were the first carrier to make an income bucket that is tied to the consumer price index or inflation, which is a cool story. Obviously, as the price of things goes up, your clients are going to get an increase in their paycheck. Another important feature that all of our income products have, and I think it was a feature that I sold most of the F&G annuities that I wrote, is our impairment multiplier. And our impairment multiplier is something that really provides a lot of peace of mind to clients, all built into this plan. I'll show you how that works here, you know, as we go on, but it's a really nice feature. And if you're in California, it's approved there, which is very difficult to get those approved in California. So we were really stoked on that. So as I alluded to, 3 income options. So your client takes out a Safe Income Advantage. They don't have to choose when they take the policy out. They choose when they're ready to take income. And the cool thing is we have a really nice, simple calculator that you can run on our sales link page that will show all 3 payout options. So you can sit down with your client and say, what makes the most sense for you? Do you want level income? Level income is going to start out a little bit higher. 3.5% guaranteed growth, fixed increases starts out a little bit lower. What I see is the break even to catch up with level income is going to be about 8 years. So what that tells me is I might look at, you know, increasing income options for a younger client. Maybe if I have a 50-year-old whose life expectancy is 30 years, that fixed increasing based off of life expectancy can really take off. but it's a good opportunity again to just sit down and kind of look at the options and say what makes most sense. I will say level income is our most popular by far because it does pay out the most right away, and people just like to get their money back as quickly as possible, which I totally understand. Where we're winning with Safe Income Advantage, clients 60 to 70, we call it the retirement red zone. And just like football, the red zone in retirement is the most important financial time a client's going to face. The 5 years before retirement and the 5 years after are going to dictate what their retirement looks like. So I think it's extremely important now to have that honest conversation with clients about taking some of those chips off the table, especially the 60-year-olds who are still in the market, maybe have that 401k and the market's going up and down. You know, I always ask them, if you were at a casino and you had 100% of your money, would you put 100% of your money in on the blackjack table, or would you maybe think about taking some of those chips and protecting and preserving some of those, right? We don't want to bet our entire life and all the work that we did on what the market's going to do. Sure, we can have some of that money, but let's start protecting, preserving a portion of that. I call it sleep insurance. And we're going to reinsure and be able to sleep comfortably at night, knowing that we have a good income plan, knowing that our principal is going to be protected, and we don't have to worry, you know, what the tariffs are going to do, and wake up and look at, you know, what our stocks are going to do and the Dow and what the S&P, because we've got that guaranteed income plan. So that's where we're really winning. Now, that's not to say, you know, a 70-plus-year-old can't take money. You can do joint payouts as well. So a husband and wife, they can have joint income. It doesn't just have to be a single client. So if you have a husband and wife, do a joint payout. I like to put this heat map up because we talk about, you know, being top of market. You can really see that 60 to 70, where that green is, that's where F&G Safe Income Advantage is. So you can see we're really top of market, if not really close, number two, within 1% in most cases. Some of the other carriers don't have that impairment multiplier too. So you look at all the benefits, specifically in California as well. We're really crushing that market. I talked about the income calculator, really, really simple tool, really easy for clients to go down line by line and understand. You can put in the amount that you want to put in, 100,000, and it will show, you know, over, you know, on the right side there, you can see the guaranteed withdrawal percentage. At age 60, we had a 7.2% guaranteed withdrawal percentage. When I look at that, it makes me think of the investment bankers and the Wall Street guys who always said, no, it's the rule of 4. If we take out 4%, we can pretty much, you know, kind of, sort of, you know, guarantee we're not going to run out of money in retirement. What's cool is we can show a client, without risking your money in retirement, we can take that 100,000 in this case immediately, and we can pay out 7.2% of that, guaranteed to never run out. Unlike if, you know, there was market fluctuation that could possibly aid into their income portfolio. Really cool thing there. Impairment multiplier that I talked about. How do we look at that? So we base it off of activities of daily living. There are 3 activities of daily living. It's not confinement based. So your client does not have to be confined into a facility. They just have to lose 2 of 6 activities of daily living, get a written notice from an attending physician. And then what ends up happening is we double the income amount for the client. So let's just say in this case, a client is taking out $25,000 a year. If they lose 2 of 6 activities of daily living, we're going to double that $25,000 to $50,000. And we're going to continue to pay that $50,000 until the cash goes to 0. Once all the cash is depleted, the income doesn't stop. It goes back to that $25,000 amount and continues to pay that $25,000 until your client passes away. Again, something an annuity can do that no other investment vehicle can do. Even if your cash goes to 0, it will continue to pay that out. No ifs, ands, or buts. For joint, we talked about a joint payout. Instead of 2 times, it's 1.5 times, but it can work on either spouse. Maybe one spouse needs it and then gets better. A couple of years down the line, if another spouse, you know, needs home health care, they can then trigger it and utilize whatever's left in there until the cash goes to 0, and then it resorts back to the original payout. So a really simple, guaranteed income product. And people are wanting guarantees right now. So to be able to sit down with them and talk about the guarantees and that guaranteed income story, Safe Income Advantage is one of the best out there. So what F&G did recently is we are crushing in that income immediately through the first 5 years for 60 to 70-year-olds. We knew we were winning there. That's where we put most of the horsepower. But what about years 6 through 10 and 10 and on? We saw that there was kind of a gap there that we weren't quite filling. So we came out with a new product called the F&G 123. And we came out with this as of 2 weeks ago. Well, now it's been close to a month now. And we're really excited to have it out on the marketplace. Just as the name implies, it's as simple as 1, 2, 3, one solution, 2 income options that clients can choose from, and 3 key benefits there's going to be. Income options, growth opportunity with index growth, and then a really nice legacy story. So an opportunity to leverage money to pass on to kids or grandkids. You know, a lot of the clients that I have worked with always had that goal. You know, they would say if they had kids or grandkids, you know, I would like to be able to live comfortably, but I really have a goal of being able to pass money on to. And this is a cool way and a cool vehicle to be able to do that. So let's kind of dive in here. One solution, $10,000 minimum premium, just like Safe Income Advantage. So $10,000 to start. It's a 10-year product. You can take 10% out immediately. And then really strong index diversification options to be able to put the money in and grow just like an IUL. We've got strong indexes on this side. 0 fees in the plan. The Safe Income Advantage we talked about had a 1.15 fee. This one has no fees on it. Now or later, never will be introduced. 2 income options on it. Anytime income and future income. Anytime income, you choose this at issue. Anytime income gives a client the opportunity to take income within the first 10 years anytime. Future income, the client has to wait 10 years, and then after 10 years, can take income after that period. And then death benefit options. The beneficiaries will have the option to take a lump sum value of whatever it grows to, or they can take the income base, which will show you there's significant growth to the income base in this plan, over a period of 5 years or longer, so they can stretch that out. I like that play personally in an annuity. Unlike life insurance, our death benefit passing on besides a spouse is not tax-free. So oftentimes, if you got a kid who's going to inherit and get money from an annuity, if you take a lump sum, if that kid is already at a decently high tax bracket, and now they're getting $300,000 or more, which is dumped on top of their income that year, that could really move them up into a higher tax bracket. So the idea of being able to stretch those payments out over 5 years and do 20% taxation over a 5-year period to really maximize that can be really appealing. 2 income options, anytime and future. So there's a bonus on the income base, and I'll show you what that is. We've got the biggest bonus in the industry on our income base, and I'll talk about what that looks like. We've got interest credit multiplier. So as the money is growing, we've got a multiplier that's going to work to help, again, boost more money over to the income account. Then when clients turn on income and they decide they want to start taking money, there's increasing income as they continue to take money. So again, as people are worried about things getting more expensive, what's it looking like 10, 15, 20 years down the road? Surely, things may keep growing and getting more expensive. So how do we cover that? So we're going to look and use 2 people to demonstrate how each of these work and really break it down simplistically. We've got John, a reasonable fella, 62 years old, loves Dockers. He's going to put $100,000 in, and in just 5 years, assuming a 4% rate of return for John, he's going to double his income base. So that $100,000 in just 5 years will become $200,000 for him to start taking money out of. And his income base is going to be more than 9% of his initial premium. Again, crushing that rule of 4 story. Beth, she's got a little bit longer time frame. So she is going to choose future income. She doesn't need it in the first 10 years. She's going to take it after 10 years. Her income base grows 2.5 times the 100,000 she put in based off a 4% return here. Their starting income is going to be 13% or more than 13% of what she put in. So we talked about an income bonus. What happens is you put your money in to 1, 2, 3. We've got a bonus going on both of these right now. Oh, got ahead of myself. Right now, for anytime income, if a client chooses that, they get a 35% bonus on their money. That means they put 100,000 in. Their income account starts at $135,000 day one. I told you we've got the biggest bonus in the entire industry right now. We've got a 50% bonus on future income. A client puts 100,000 in, their income account starts at 150,000. Boom. So we've got our bonuses on our money that we put in. So our 100,000 starts at 135 for any time or 150 for future. Then we have a couple of moving mechanisms going on. For any time income, we have a 250% interest credit multiplier working off of our index growth. So what does that look like? It means that if John got a 4% interest credit, we would take that 4% based off of whatever index, let's say use the S&P 500 and got a 4% return. We would multiply that 4 times 250% and credit 10% over to his income account. Again, as we're looking at bolstering a client's income, really strong opportunity to really leverage some serious horsepower over to your client's income account and their purchasing power. For future income, the money is going to, again, have to sit in there 10 years. After 10 years, they can take income. There's a 150% multiplier. And you take that 150% times 4, in this case again, for future income, they would get 6% credited over to their income account. So we've got our bonuses up front, 35 or 50. We've got our interest credit multiplier, 250 or 150 to help bolster and grow the income account. Then when a client decides they want to turn income on, we talked about increasing income. There's still, once they trigger income, 150% earnings index growth feature on it. So let's just say they continue to average 4% return once they turn income on. A 4% return times 150 is going to give them a 6% annual increase to their income. We're going to increase just based off a 4%, excuse me, average return, 6%. Pardon me, I'm going to get a drink of tea here. All right, sorry, I'm battling some allergy stuff here. So let's go back to look at John here. 100,000, 35% bonus for anytime income. His starting income base, again, is 135,000. Average annual interest credit, we're going to assume 4% return. Again, for anytime income, he gets his 250% multiplier, so we credit 10% over to the income account. John's income base, just after 5 years, has grown from 100,000 to 217,419. Again, just based off a 4% return. So his starting annual income is 9,414. But remember, once he turns income on, we still have our increasing income capability. So let's assume that he continues to get 4% return. He's getting 4%, we take it times that 150%, 6% annual increase to income. His income after 5 years, so in year 10, would grow to 12,598. So it starts at 9,414, grows to 12,598. Again, this is based off a 4% return. So nothing pie in the sky, very reasonable. So how does that match up against our, kind of top competition out there in similar products? You can see our bonus is a little bit higher and our income is about 5 to 6% higher. than our closest competitor in this space. So we are top of market right now, definitely. And the numbers show it. Clients 50 to 80. And we talked about with Safe Income Advantage, we're winning that market and in that early 0 to 5 years. We wanted to start winning in 5 to 10. So you can see we are top of market payout for clients looking for performance-based increasing income in years, 5 and on. So we really have that whole early income to mid income to late income story all down now. So that's anytime income. Let's go back to our pal that we talked about earlier, Beth here. And let's talk about how future income works. Same scenario here. 100,000, biggest bonus in the industry, 50%. Your starting income base is 150,000. We're going to average a 4% return with Beth. We're going to apply, instead of anytime income or unlike anytime income, again, it had an interest credit multiplier of 250. This one, remember, has 150. And as you run illustrations, all the numbers will be calculated for you. But averaging a 4% return, she gets 6% credited to her income base. Her income base, because she has to wait 10 years, has grown based off a 4% return from 100,000 to close to 270,000. Her starting income in year 11, when she turns income on, is 13,566. Again, she still gets interest credit earnings multiplier to increase her income in retirement at 150% multiplier. So that 4% still gets a 6% credit over there. After 5 years of her taking income, her income has increased from 13,566 to 18,154. So again, people are worried about keeping up with the cost of living. How do we keep up with it? We keep up with it by having adjusted increasing income opportunity and strong income guarantees that we can show people. Self-funded pensions, right? Let's show them how they can take self-funded pensions and turn that into a guaranteed income. And you can see, again, like matched up to our competition here, we are sitting pretty good. Again, 5 to 6% higher payouts. So where we win, clients 55 to 80, taking income after year 10. Top of market in this performance-based income space. So we talked about the income options, really strong increasing income capability, 0 fee, huge bonuses on income account. If you can tell a client we can jumpstart your income account by 50% in your purchasing power in one day, really strong. But on top of that, there's lots of good built-ins here. Liquidity riders. Your clients can access 100% of money for life's unknowns. That's one thing that annuities sometimes will get a bad name for back in the day. Like the old style annuities, not liquid. You can't get your money. The insurance company has your money. There's great liquidity in these. I call them annuity 2.0s now, or next generation annuities that, are built in for clients' protections. So a client can access 100% of their money for impairment or home health care, nursing home care, or terminal illness without any surrender charges. So they won't be penalized for any of that. The impairment multiplier is available on here too. Those clients are taking income. If they lose 2 of 6 activities of daily living, they can double their income if they're single, 1.5 times if they're joint. And those income payments for impairment multiplier on here can increase as well. If you have index growth, their impairment multiplier money can continue to increase as well because you're still getting that 150% multiplier on your impairment money. So again, leveraging and hedging against inflation and the cost of living. And then last but not least, I love this feature, the death benefit. So the beneficiaries can choose lump sum or they can take the income base over 5 years. So what does that look like? And how we match up. It looks pretty good. putting 100,000 in, again, assuming a 4% rate of return here, you can see F&G, the beneficiaries can take, based off of 4% after 5 years, 115,927 lump sum. Or remember, we're really leveraging up that income base with our performance multipliers. They could take that income account and they could take that over a 5-year period. So 186,925. Death benefit after 15 years of 4% average growth, 155 lump sum, or $290,290 over at least a 5-year period. And again, stacked up against kind of the competition, we're great here. So for me, this is kind of it plays in two markets. You know, Mr. and Mrs. Jones, I know, you know, income is the outcome that we're looking for here. But I've worked in this business long enough. I know that things change. And, you know, if you don't need income, let me show you a cool feature too, that we're able to leverage money to help pass on to kids or grandkids, because I know that was something that we talked about that was important to you. So if you don't utilize it, your kids or grandkids are going to get a really nice portion of money if this, you know, projects the way it has been. And to me, that's a cool story to be able to, you know, kind of tie it on both sides. Someone's going to get the benefit of this, whether it's them in, you know, really strong increasing income, or the kids or grandkids or church or charity or whoever their beneficiary is. So as we put it all together, biggest bonus in the industry, 50% for future income, 35% for any time. 100,000 becomes 135 or 150 respectively. Anytime income, really crushing again that 50 to 80 income in years 5 through 10. And then for future income, 55 to 80 income after 10 years, 11 and on. And then the third part, that installment or enhanced death benefit portion. So it is 1 product, 2 income solutions, 3 benefits. Really simple, impairment multiplier, no fee, strong renewal rate history with F&G to be able to bolster, because, you know, ultimately we really want to bolster that income account here. So we're really excited to have that one out to market. We've got the early income with Safe Income Advantage, and now we've got this covering, you know, years 5 and on. Let's talk about opportunity right now, because we just made a significant change in our income replacement guidelines. We, prior to this week, could only take a 3% surrender charge on income business. That means that if Safe Income Advantage was illustrating significantly higher income than a competitor maybe, but they had a surrender charge that was above 3%, we could not take that in our suitability guidelines. As of this week, we changed that. If a client is between 0 to 69, we can look up to a 10% surrender charge on an existing income policy that they may have, if our income increases their income by 10%. I told you we have the highest payout factors. Our payout factors are crushing the market. If you run into a client that has an income plan, they're already taking income, and their surrender charge is under 10%, send it into us. Let us look at it. It's an easy opportunity. It's a no-brainer sale. If you can look at a client's income plan and they're already generating a guaranteed income, who wouldn't want to increase that payout amount? And, you know, as a fiduciary, let's do our jobs and let's maximize, let's just make sure that your money is working as hard as it should be. Let us run through this. We're independent brokers. The cool thing is we can run it through all of our handful of carriers. But right now we've got some really, you know, aggressive payout factors out there with A-rated carriers. Let me shop this and make sure that you're getting as much as you should be. For clients 70 and above, we can take up to a 7% loss, 7% surrender charge, but our income has to increase theirs by 20%. Still, we're in the market there. Our income is increased, beating handfuls out there. And unfortunately, last year we weren't able to take a lot of this business, even though we were, you know, significantly beating their income plan. So now we're very excited to be able to have raised those. The cool thing is too, it can be used for illustrated income and performance-based income. So it can be used for F&G 1, 2, 3 as well. If a client has a plan and they're getting a guaranteed income, you can run a performance-based illustration, show a 4% return. If our income beats theirs, you can use the 1, 2, 3 as well. So it's just a big opportunity internally and externally as you're visiting with clients. Clients need an income plan, period. If you have not looked at or utilized some of our resources before, we have really, some good stuff here just on the overview of doing annuity business. And I know, maybe some of you are just starting to kind of dip your foot in the water of annuities. I think that, I would say just be bold. It's a better time now than it's ever been for people, needing to have this conversation. People need someone to talk to. Part of that survey, 60% of people in their near retirement were interested in annuity products, but didn't have anyone to talk to about them. There's a big market out there. So be bold. I think, again, we're in an industry where we're changing people's lives. You can sleep well at night. You can make a great living, but you're also helping people. And there's not many, jobs out there where you can sleep well at night and make a great living, change people's lives. Got ahead of that one there. So 1, 2, 3 resources here. If you want any resources on that, feel free to screenshot that QR with just some at-a-glance stuff on, how the product works itself. So here is our contact information for our sales desk to run illustrations. I travel all the time. I've got an internal as well named Zach Goforth. My number is right there, 515-710-9556. I will give you my number. And whether it's myself, if you have, something that you're looking to run an illustration, I will get my team to do it. I will do it. Like, we are all hands on deck, and, we're happy to help you guys. We're here to help you grow. We're here to help you get comfortable in our portfolio and, kind of the services we provide. So with that, sorry if my voice is a little hoarse. I did pretty well, I think, all things considered. I've been drinking some tea as we've been going through here, but really, thank you guys so much. Again, reach out if I can help.
You did great. Can we go back one slide for the QR code? I think some people were going to scan that.
You bet.
Thank
Yep.
you. Okay. And if we have any questions, anyone, please go ahead and come off of mute and ask your questions.
I have a few questions, Ryan, if it's okay. This is Pastor Eddie Newvine. The question that I have, one of them is, can non-qualified funds be applied to these products?
Great question. Yes, I can. So you can utilize non-qualified or qualified money for either of them.
And what is the minimum for that?
Minimum is 10,000 on each.
Okay. And is this a lump sum only product, or can there be continued contributions for people that are under retirement age?
Another great question. So they are flexible premium. I will say, Safe Income Advantage, you can add additional money. It doesn't work well. We've got better products for flexible premium. All of our minimum is going to be 10,000 on all of our products across the board. We have really great flexible premium products. Safe Income Advantage really works best, though it is flexible, as a lump sum, because only the lump sum amount you put in there is going to participate in that 7.2% roll up. So the additional money you put in there will just participate in the index growth. It doesn't work out great there. 1, 2, 3 can be a really great flexible premium product, because every dollar you add into that, continues to participate in the performance, interest multipliers in there. $2,000 minimum additional premiums, though. That's the one caveat. It is a little, we're not a, smaller funded carrier. There are some carriers out there that'll do kind of, EBT planning and take out of paychecks and stuff. Our minimum additional premium is $2,000 after that $10,000 initial premium.
Okay, thank you. Those are my questions. Great presentation.
Perfect. Yeah, thank you.
Any more questions, guys? I have a question. How is there an uptick in annuity sales right now? And should we be banking on that right now?
There is, yeah, there is. I think people are worried. Yeah, we're definitely seeing like some big submit numbers. So and we are, again, I think one of the best vehicles, a great bond alternative. So last year was a record year for us and every carrier, and we're definitely seeing similar trends this year.
So don't be a secret agent. Go out there and help everyone right now.
I mean, man, like, part of me just wants to hop on and go out and meet people with you guys, because I do think like right now is such a great opportunity to tell the story of what you guys tell, whether it's, the IUL side with tax-free retirement opportunity, whether it is working and asking people, what are you doing with your 401k? Are you comfortable with what the market's doing right now? Have you been watching the market? Find those pain points. People have pain points right now. It's obvious. And they are worried. And we can show them some ways that we can help recuperate that loss and get them back on the right track so they can sleep well at night and not have to worry about that.
Agreed. And recently I'm seeing an uptick in the size of annuities, right? 250 and above is what I'm seeing right now. Is that what you're seeing also? Like the amounts are pretty large that people are moving over?
Yeah, I mean, I'm not sure what our average size is. I will say we just got like a $5 million Safe Income Advantage sent in recently, in one swoop. So there is obviously an appetite for big money moving into safe products like these.
Wow. 5 million, guys.
So any 5 million cases you have, feel free to just shoot them my way. I know they're all over the place, right? Just knocking at your door and
Yes, feel free to send them my way too. That would be great. 5 million. I can't imagine what the payout on that would be like.
Yeah, it's pretty significant. So it's cool. It's cool to see those come through. It's cool to that people trust our company. With that size of money, and we have a really great team suitability wise too. Like there's a process things like that go through. We don't just say give us all your money. We take a hard look, underwriting wise, to make sure we're not overbalancing things that we shouldn't be. From a company standpoint, because our most important thing is maintaining the guarantees, the contractual guarantees that we have on the books, and we're very, very diligent about that. So I would love to take more 5 million, but unfortunately we don't always get those through.
Can you give us a tip? Like, since we're in the sales organization, it's good to understand products, but what is a question we should be asking clients or like friends, family, just a way to kind of pull those annuities out? What's a good question you think that we should ask?
Yeah, I mean, for me, I kind of touched on it. When's the last time that you talked about your guaranteed income plan in retirement? I think that very few people have talked about their guaranteed retirement and plan. Have you talked about your paycheck and playcheck money? What's that? Well, everyone wants to have play days and playcheck money, but we also need that paycheck money coming in, right? We need our baseline guarantees. And then after that, and I was asked, how much does it cost to be you at the end of the day? Like, let's go through, let's take an inventory. What does it cost to be you at the end of the month? Let's find out what that paycheck needs to be. And then on top of that, we can have our playchecks and you can, go have fun. So, that for me, like starts to get the thing clocking, the wheels rolling in people's head. And then after that, it's all right, perfect. So what's your risk tolerance? Are you happy with and feel comfortable with what you're seeing every day, in the market? I know you just retired, right? And you've worked, 50 years, 60 years to put away and save as much as you can. Are you comfortable with it going up and down and watching that? Is that worry? Does it keep you up at night? Yeah. Yeah, I'm hearing that a lot too from the clients that I'm working with, and that's why I'm starting to talk to them about some, guaranteed self-funded pension options that we have. Is that, something that's interesting to you, and just things like that, because there are so many pain points out there that are just right there for the taking right now that people are not talking about.
Do you have ready to go slide decks? I really love the slides that you put up there. Do you have like client facing slide decks maybe?
So I can see if we can get some. We don't really have, like, we've got client facing marketing pieces. We don't have, like, we're working on building things like that. At this point, we don't have really client facing pieces that are kind of turnkey and sitting with clients. That's something I would love to, but at this point, we're kind of focused on the IMO level and talking to our IMO principals and our IMO partners, like you guys and AIN, and providing you guys the information to kind of go out and spread the gospel at this point.
I love what you said. What does it cost to be you? I think that's a really good conversation. Instead of just saying like how much do you make or how much do you need to retire, just what does it cost to be you? That's a really easy way to pull information. Thank you for
Yeah, I was gonna grab. I'm a big person on like third party resources too, and like just Tony Robbins' book here. There's so many great pieces in here. You can talk to clients about annuities. I can hold it up. It's just called Tony Robbins' Money Master the Game, and he interviews just the top financial minds in the world, and there's just some like great pieces on fixed index annuities in here by some of the top economic minds about why every person in retirement should have one. And it's just something like, I always love third party resources because we can, blab and blab about, how it's the greatest thing since sliced bread. But when you bring out, like, don't just take my word for it. This guy is a, economics professor at Yale. Like, let's listen to what the experts are saying. And I love stuff like that too.
Appreciate that. That's powerful. Thank you for going off and giving us some insight. I really appreciate it. Any more questions, guys? Because I know I'm asking a lot of questions. No questions? We're good? All right. I guess we didn't drink enough coffee. And that's totally okay. But thank you so much for your time. I truly appreciate it. I learned a lot, and I hope everyone else did too. And hopefully we'll start throwing some $5 million annuities your direction. Yay!
All right.